At the end of Lesson 1, you will be able to define annual property tax roll, identify the assessment date and fiscal year, and identify annual property tax roll components. To properly assess property taxes each year, you must create and maintain an extensive database of information on the properties in your city or town. That information is used to put together the annual property tax roll. The property tax roll is a comprehensive list of the information as of the assessment date, which is January 1. The list includes the taxable real estate parcels and personal property accounts in the community, the owners of those parcels and accounts to assess, the fair cash valuations of the taxable properties, the usage classification of the taxable properties, and the property taxes assessed on the owners of the taxable properties, which is determined after the tax rate is set. Without the annual property tax roll, communities could not assess property taxes, and they would not receive the revenue needed to support their annual budget goals. The local property tax is an ad valorem tax. Ad valorem means according to value. In Massachusetts, the property tax is assessed for each fiscal year based on the fair cash value of the property on the January 1 assessment date that precedes the beginning of the fiscal year. A key characteristic of an ad valorem tax is that it is assessed as of a fixed date. The person to be assessed and the factors that impact the valuation are all determined as of that date. The January 1 assessment date is the date that liability or legal responsibility for the property tax is fixed for the next fiscal year. The fiscal year for Massachusetts cities and towns begins on July 1 and ends on June 30. The owner of the property on January 1, the date the liability for the tax is fixed, is responsible for the property tax due for the entire fiscal year. This is so even if the owner on January 1 sells the property during the fiscal year to someone else. The fiscal year is identified based on the year it ends. For example, the fiscal year starting on July 1, 2017 and ending on June 30, 2018 is called Fiscal Year 2018, or FY18. What information do you need to know to create the annual tax roll? You will need to answer some questions about the taxable property in your city or town to prepare the annual property tax roll. Those questions are: what property is taxable? Who is the assessed owner? What is the property's fair cash value? And how is the property used? To create the annual property tax roll, you need to determine what property is taxable. And, as previously explained, you need to determine this information as of January 1, the assessment date. You must identify all the physical, real, and personal property existing in the community on January 1. However, if your community has accepted a local option, the physical status of real estate on June 30 is treated as its condition on January 1. This means, for example, that buildings or improvements to real property made between January 1 and June 30 are considered as existing on January 1. This option is generally referred to as Chapter 653 and must be accepted by the legislative body of your city or town. You must also determine who is the assessed owner of that property. You need to identify the owners of all real and personal property on January 1, the tax liability date, the assessment date. You will learn more about how to determine an assessed owner later in this module. You will also need to know the property's fair cash valuation as of January 1. You will learn about the definition of fair cash value in the mass appraisal process in Module 2 of this course. And finally, you will have to determine how the property is used as of January 1. Under the property tax classification law, there are 4 classes of real property: residential, open space, commercial, and industrial. You must determine the class that applies to the use of all real property on January 1 based on definitions found in the law. Classification of real property according to its use will be covered in Module 4 of this course. Other amounts are also included in the annual property tax roll. These are called collectibles.
They include other amounts owed to your community, which by law may be added to the tax commitment by the assessor if they are not paid and are secured by liens.
Then, if these amounts continue to be unpaid, they can be collected as part of the tax. Collectibles include apportioned betterments and special assessments and overdue municipal charges that are liens. In the case of collectibles, your role is ministerial. You do not determine the amounts charged, nor do you process abatements of the charges. What is the advantage of adding these unpaid charges to the tax commitment? It allows the tax collector to collect the amounts through the tax title process if they are not paid. This means going to land court, acquiring title, and selling the property to collect the amounts owed. So your role is important. Adding these other amounts to the tax commitment ensures that your community collects the amounts owed to it. Let's review the key concepts discussed in this lesson about the annual property tax roll. First, property taxes for a fiscal year are assessed as of the January 1 before the beginning of that year. The person or entity assessed and the determinations that impact the assessed valuation are fixed as of that date. Second, the fiscal year for Massachusetts cities and towns begins on July 1 and ends on the following June 30. And third, to assess annual property taxes, assessors must obtain and update data on the properties in their cities or towns as of each January 1. In addition, other town officials provide them with data about charges and amounts owed to the city or town for which there is a lien. The assessors then add the amounts to the tax for collection purposes.